here. So welcome everybody to the Be the Sniper or Be the Target webinar. It's your choice. Make it today. If you're not making that choice and actively trying to be the sniper, then you're the target. Okay? And you want to make sure to not be the target and how to be aware of that. So as always, we've got to throw up our disclosures. You can check those out. Trading involves risk. Make sure you know what you're doing before you do it. Today we're going to talk about third bar sling, or sometimes you might hear it referred to in the elite room as TBS. Okay, it stands for third bar sling. Now, how many of you were on the training we did about the elevators, the elevator setup? Okay, well, for those of you that weren't, or for those of you that are listening to this recording later, okay, if you're listening to this recording training about third bar slings, it might be a little out of order, but if you're watching this and you have not watched the elevator training, okay, including the video called Simplifying the Elevator Trade, I want you to go ahead and pause this video, stop this section, and I want you to go and skip forward and watch the elevator training first. Specifically the video titled Simplifying the Elevator Trade, because there's a lot of similarities in the concept that I'm trying to get across here. And if you've already seen the training I did about elevators, this sling training is going to make a lot more sense, because for those of you that were on it the other day, I really went into depth about what that elevator was, right? About that first push in the market, and then you have a little bit of pullback with rejection, and then it shoots off, goes the other way, right? We really talked about that concept. We talked about why we want that market structure to happen in the beginning of a potential new trend, right? So we really talked about that in depth. So if you're watching this and you haven't watched that, pause it and go back. Now, if you're on this webinar and you weren't on it, just follow along and you can go back and check it out. So let's talk about this for a little bit. I want to help you, just like I've done, not just show you, all right, here's what it is, here's the rules, enter and exit. I want to help you understand a little bit more what it's all about, okay, and why this market structure exists and what we look for. So let's talk about a wick, okay? This is the same screenshot I showed you the other day. Okay, we talked about potential starts of a trend, right? So like down here, for example, we see the market push up, then it pulls back down and does what we call a what? A pullback or a retrace, right? Then it goes up a little higher, pulls back, goes up a little higher, pulls back, goes up a little higher, pulls back. That's a trend structure, right? We all understand that that's a trend structure. Something we talked about in detail the other day was, you know, the difference of, okay, here the market pushes up and it pulls back 3 bars, makes a retrace or a pullback of 3 bars and goes on up. Here does the same thing, makes a pullback of 3 bars and goes on up. But then we talked about what is an elevator. An elevator, for example, would be right here, where it's, you know, 1 bar up, 1 bar down, another bar up. Another way we explained the elevator was what? Who can tell me? Just a 1 bar pullback or a 1 bar retrace. And I kind of tried to help simplify it for you that way of, hey, it's no different than your normal trend structure of a push up, a pullback, a push up and pull back. It's just a 1 bar pullback before the potential trend continues, right? So we talked about that. We understood what that was and why we're looking for those early on. All right. So let's just talk about a simple chart. Let's talk about just right here, for example. So we see these bars coming up, 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 up. Then on this bar, we see this long wick. Does everybody understand what that means? Does everybody understand what a wick is? Well, it means the market came up. Let me switch over to a chart here that I can zoom in better. Okay. Come on. Okay. So right here, for example, this bar is coming up, this bar is coming up, this bar is coming up. This bar came up and closed right here, right? Well, what happened was the market started to pull back down this way, right? Started to pull way back down, and then it couldn't go any further, and it ended up coming back all the way up, and it closed up, right? That's why that wick is sticking out there, because the market pulled outside of, the shaded, bar cell. The bar ended up closing up, but it made a big pullback first. But it did not pull down far enough to make a down closed bar, right? Here the market came up, this bar closed up. The market kept going up, 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 and then it came back down. Then it started to form this down closed bar, and it came down far enough to actually form a down closed bar and close as a red down closed bar. Everybody understand that, right? Very basic of how a chart works. Okay. So another way to look at this is these bars are going up, 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 up. Wait, we're going the other way. We have a fight. We're pushing down. We're pushing down. We don't want to keep going up. We're pushing down. We're pushing down. We're pushing down. Then that downward momentum got what? Like rejected, right? And it came all the way back up, and it came all the way back up, and it closed up. That's what a wick is in a trend. Does that make sense? Everybody get that concept. That's what a wick is there for. Okay. So as an example, let's see if I can get this chart to maximize. My chart's giving me trouble on this screen here. So let's take a little peek at something here. Let me see if I can find one. All right. Does everybody see this little bitty wick right here? This market's coming up, 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 and then it pulls back a little bit, right? Everybody see that little wick there? Compared to this wick right here, a couple bars later. So just logically, what would that tell you about that first wick? Was the opposing fight, the momentum coming in for a downward push, was it stronger most likely here with the small wick, or more likely here with the big wick? I mean, very simple, logical, elementary question, right? Okay. Obviously, there was a bigger push or stronger push when you have a much bigger wick that got rejected, and then it came back up, kept going the other way. Okay. So, with that being in mind, let's look at this overall trend here. Okay. So we had the market push up, pull back, push up, pull back, push up, pull back, push up, had a 1 bar pullback, push up, had a 1 bar pullback, and then go up. Everybody gets that, right? That trending concept. But now take it a micro step forward. When the market comes up here and then makes this wick pullback and then goes back up. Makes this wick pullback and then goes back up. Makes this wick pullback and then goes back up. Makes this wick pullback and goes back up. Do you see how it's the same structure? It's literally the same structure as it were in this whole trend. The difference is, how do you classify that pullback? What was the strength of the pullback? How big was the pullback? You've got a push up in the market with a what? 3 bar pullback. Got to push up in the market with a 3 bar pullback. Sometimes you may have a big push up with multiple bars pullback before it continues, right? The next from there is we've got a push up with a elevator, or what we call coil chop, or what we call a 1 bar pullback before it goes up. Or we also have the concept of a push up with a wick pullback, and then it goes. Does that make sense and maybe help simplify what a wick is or what a sling is? Why do we call that a sling? Well, I think it's pretty clear, but first of all, we want to qualify a sling bar. We don't want to just say that any bar with a wick is what we want to call a sling bar. We want it to have at least 2 ticks of a wick, right? And the detector is not even going to show up and show it to you without it having at least 2 ticks. But the more the better. And we kind of talked about that, right? We understand why a bigger wick can be stronger. It's like an archer pulling back on the bow, right? The further he pulls the bow back, the further potential momentum of that. Okay, so we call this a sling bar. It's just like pulling back a slingshot. Okay, and we don't want just any wick. We don't want just a little bit of a pullback. This kid pulling back on this slingshot right here, you can see it. There's not a whole lot of strength in that pullback. If he lets it go, it might move forward, right? It might kind of toss there. Everybody get that? Compared to whatever this dude's doing right here. Right? So elementary, simple pictures there, but you get the concept. We don't want just any wick. We don't want just any little pullback or any little sling. We want there to be a good pullback because it's just logically going to tell you that could be more momentum. So do you understand, especially with these basic illustration pictures, why we call this a sling? Because it's a pullback and then let it go back in that direction. It's a pullback and shoot off. Everybody got it? Very simple. That's why we call it a sling. Okay? So we understand the concept behind the sling. The market's going up. We get a pullback like the slingshot and let it sling off. Market's coming up. We get a pullback like a slingshot. It gets rejected, right? You can clearly see this rejection without order prints. Even without order prints or exhaustion or trapped orders or anything else, just looking at this blank chart, just the market structure itself, you can see that concept of rejection, right? It's pushing up, it starts to pull back. This downward pressure gets rejected down here and it slings back up and goes off. Pushes up, pull back. That move, that drive, that volume, momentum coming in to push it down gets rejected down here and pushes it back up. Right? So just on a blank naked chart, you can see that market structure of quote unquote rejection, or that the trend is not over, the trend is not exhausted, whatever you want to call it, right? We can see that structure. So now, why are we focused on TBS or third bar? Well, because it has a higher probability. Historically, we have looked over this, we have tested this, we've seen it many times, and it's basically at a potential reversal point. Okay? The fight to keep going in the trend direction, okay, can get rejected early on and then it shoots off. Kind of like we talked about with the elevator, we're looking for them early on. Later in the trend, they might not be as strong. Okay? So let me just kind of show you here. What we're looking at is like the trend continuation gets rejected and goes the other way. What do I mean by that? Well, let's take a quick look here. So you see right here, this market did what? It pushed down, right? The market pushed down and then it pulled up. It pushed down and then it pulled up. And then, so what do we expect in a downtrend to normally happen? We expect this, right? Push down, pull up. Push down, pull up. Push down to keep going down, right? That would be a normal, typical, basic downtrend structure. Everybody understand that? The concept clear, right? Push down, pull up. Push down, pull up. And then what do you notice right here? Okay, first of all, your detector is purple. This bar, you see the wick, right? So that structure started to happen. That typical market trend structure we expect started to happen. You get where I'm going with this now? push down, pull up, push down, pull up. Starting to push down, rejected, go the other way. That trend structure got rejected. Okay, yeah, Don says a failed restart. You could call it a failed restart. So does everybody get that concept there? So also notice this reversal bar here. Okay, so the market came down, then it came down and made a lower low, right? Came down even further. So we're looking for that downtrend structure of pullback and push. Push, boom, got rejected, went the other way. So this up close bar here, this reversal bar, so we're in a downtrend. This reversal bar is bar 1. This is bar 2. This is bar 3. Third bar sling. Okay, so do you understand why we are looking for that third bar sling? Because that's the one that typically and historically has the highest probability of taking. Okay, and it's that first rejection of that trend continuation pattern and that first momentum push against it that we want to get in on. Remember when we talked about elevators, how we talked about the further along in the trend something is, the weaker it could be, right? Remember the analogy I've given a couple times. You're at the bottom of the hill, looking up the hill, looking up the mountain, you're going to start running. You're going to run, and make some progress up the hill and take a little breather and break. And then you're going to go a little further and take a little breather and break. Each burst up, you might make distance, but you're going to what? You're going to be running out of steam each time, right? Your strongest, most powerful move is going to be the first and second moves. Okay? So you guys understand how this is kind of fitting into the same concept we talked about with the elevator? Okay, as far as what it is and how we look for them early. Okay? So, and note, and we'll talk about this some more, we're not just looking for a wick bar. We're not just looking for an elevator bar. We want there to be what? Our normal, typical TX trade. We want there to be exhaustion and trapped orders. Does it surprise you that right here there is short trapped orders that we're expecting for the market to keep going down? That should not be a surprise in any way, right? Because what are 90% of the retail traders out there thinking? The market went down, it pulled up. The market went down further, made a lower low. We're trending, trend continuation. It's expected to have a pullback up, and as the market starts to come back down, they're piling in, right? These short sellers are piling in right there to keep going short because they're strictly looking at this market structure. That's logical. It makes perfect sense why there would be trapped orders right here, a group of sellers trying to keep going short, because that's what the market visually is telling them to do, right? 100% logical. But what we get to see is on that push down, all these sellers came in right there and are getting trapped. The market's getting rejected and going back the other way. So we see these sellers trapped. We see exhaustion on the bottom of this bar, right? We're able to recognize this wick and what it could potentially mean as a pullback slingshot the other way. So we know where this potential momentum could spring off from and what direction that pullback sling momentum could go in. So we know that that's what we want to take advantage of, right? Is go in that direction of the momentum, not in the direction of what's happening on the opposite side of this bar, which is people being trapped and getting exhausted. Does that make sense just right there? Of why 90% of retailers out there would completely be short right here. And you partially don't blame them, right? Because that's what the market's telling them to do. But you get to see that trap. You get to see the exhaustion come in and the bar start to go the other way. After it's made this pullback of a sling, remember the picture of the guy pulling back on the slingshot? Once that lets go and goes that other way, where do we expect that momentum to be, at least for a few bars? And that's where we want to be the sniper, recognize what's happening, recognize the rejection, the exhaustion, the trapped, and the potential sling of momentum back the other way, and we want to get in on it right here, one tick above this bar, and grab a couple bars. In addition to that, the other rule that's on this trade, and we'll talk about it, is at the very bottom price level. So not do we just see an overall chart pattern rejection. Not only do we see a sling of momentum the other way, not only do we see trapped sellers and the market pushing the other way, not only do we see exhaustion on the overall bottom of this bar area going the other way, we want that very bottom price cell to have either a paw print designating a weak price area, or we want it to have a mini magnet designating a specific price cell rejection and push off. Does that make sense? How what we just did right there stacked our odds. Okay, let me show you another example. I mean, this is very clear. Market comes up, pulls back, goes higher up, pulls back, goes higher up, pulls back, starts to go back higher, and what? Third bar, right? 1, 2, 3. Third bar, starts to go back up, gets rejected, comes down. Right? What's at the top of that bar? Because again, what should be totally expected here? Made a high, pull back. Made a higher high, pull back. Made a higher high, pull. We're in an uptrend. Market structure is telling us we're in an uptrend. Expected market structure as we start to pull back would be, okay, we made a pullback, now let's go back. And you see it starting to do that, and it can't. Completely rejected. Push, bar closes down. After slinging up, getting some momentum to fly down. Top of the bar has an exhaustion box. Top of the bar has trapped buyers right here. You see them? They're trapped because as the market came back down, started to go back up, they all started piling in to get in. That makes perfect logical sense. But boom, they're trapped. Nope, we're going the other way. And we got a what? Paw print. Bam. Does that help just what we've already covered right there? Does that? Yeah. Yeah, Susan's like, what is it, the Star Wars? It's a trap. Exactly. So just that right there, for those of you that were new, or those of you that have struggled a little bit with, I don't really understand third bar slings, what's the point of them? Does that right there alone help clear it up? Of what they're for, how they work, and why we're looking for that third bar. It's just because we've seen historically and back testing that for this rejection setup, when it's on that third bar, that's where it's the most powerful. Todd, exactly. It shows a possible reversal of the trend. Todd, you got it. And does everybody see that? That's where you see that could be the end of this trend. Like that could be, it's like, now hold up. We may be done going up. We're There's not enough power here to keep going up higher like we have been doing. You tried, and we came in and said, nope, we're going this way. And that's why we want in right there at that pinpointed area to go with that momentum or with that potential opposing push. Okay? So, okay, so let's see here. Marion brings up a good point. Very, very good point. Per usual. Can anyone else look at this overall market structure and tell me something? When this first push up happened, what was the ODD level? 62.30. So it pushed. Market pulled back, and then it what? It went higher on what? Only 54%, right? Then it went higher on what? Only 84%. Yes, for a lot of the ODD trades, we want to see, below 80 or whatever. But look at the whole structure here. Marion brought up a good point. This right here is considered what? Divergence. The market went higher on less. Then it went up again and went even higher on less again. You've got double divergence in the trend. Does everybody understand what I'm saying there? This pushed up. Then when it pushed up even higher, it went higher on almost half the volume, only 54%. Then it went even higher again on only 84%. So 2 times in a row, this trend went up with divergence. Divergence 1, divergence 2. Then you see this third bar sling rejection. Does that make sense how even more powerful that is? I didn't even catch that when I took this screenshot. Good catch, Marion. Because yeah, I'm a lot more excited. I mean, I'm excited about third bar slings in general. I love them. But I'm a lot more excited and I feel a lot more confident in this trade short when I see that the upward push got exhausted twice already and then right here got rejected all around. Does that make sense? Everybody get that? How that's just a stacking of the odds. Just the third bar sling alone stacked our odds, right? Because we've got rejection of the trend. We've got exhaustion at the top of the bar. We've got trapped orders at the top of the bar. We've got a paw print at the top of the bar. We've got no obstructions in our way to get to our profit. And we just added to that divergence 1 and divergence 2. That is stack. Is that a possibility trade right there or a probability trade right there? When you stack all those things together, that's a probability trade, not just a possibility trade. Okay? Good call, Marion. Thank you. Okay? No, DR, the direction of the DR does not matter. This trade can go against DR. Okay? Also, what's a big thing you notice different about this trade than all of our other trades? It's pretty much the only sniper trade we give you that's not a what? It's not a reversal bar. Did you catch that? Because we got down close, starts to push up, comes down, and we're entering right there. Every other sniper trade's a reversal bar, isn't it? This is the one that's not a reversal bar. Okay? Any questions so far on what we covered? We're going to cover some more. Is anybody lost right now or confused about a wick, a sling, or a third bar sling? We good to roll? Good to go forward? Everyone good? Everyone awake? Okay. All right. Now, where do we look for these? Okay. We're only looking for these at higher highs or lower lows. We're not looking for these in chop or in range. Okay. We're looking for what? First of all, we're looking for that market structure, right? Of a potential trend. And we're looking for the rejection of that structure to go the other way. Make sense? So we're only looking for shorts at a what? At a higher high, right? At a higher high means the market's gone up. Okay? We're only looking for shorts at a higher high, meaning it's come up, pulled back, come up, pulled back, come up. At this point, we're only looking for short third bar slings. We're not looking to go long as the market's going up, right? We have our trades, our trend trades. We have our trades to go with the trend. We're looking for shorts When the market's going up and making higher highs, we're looking for it to be, for that market structure to keep going back up, to be rejected and sling the other way. And we want to get in on the sling the opposing way. Does that make sense? It's kind of a counter trend trade, but a directional bar trade. We're not trading on a reversal bar. So we're looking for a it's counter trend, but it's pullback continuation. Was that confusing, or do you understand what I'm saying? So we're only looking for shorts on third bar slings as the market is making higher highs. We'd only be looking for longs as the market's making lower lows. And do you understand why? Because we're trying to go counter that market structure, that trend structure, when we see that trend structure breaking down, when we see that weakness happen. Everybody got that? Now, you also know that sometimes you can be looking at your 10-tick chart, and if you're not zoomed out, you might be like, oh, this is a higher high, but if you look back, it's really not, right? It's really kind of in the middle of a chop or a range or something. You know, if you want to add a layer of probability onto these, and I know this is something that Lori does as well, she also likes to check her 30-tick chart, okay? Because, you know, what you can do is, you know, there's a 30-tick chart even in the elite room. So, you know, sometimes your smaller charts might look like you're at a higher high, but then when you really look, you're in the middle of some chop on a 30-tick, or you're in the, you know, you're in the middle of some range. So you can also look over to be like, okay, let me check the 30-tick. Okay, yeah, I'm at a higher high and I'm at a higher high. Like if you're seeing this right here on your 30-tick, right, you're up in here and you see on your 10-tick a third bar sling short, that could help give you some more confidence that, hey, I'm not only at a higher high on my shorter term chart, not only is everything lining up, but I'm also at, you know, higher highs on my 30-tick chart. I'm not in the middle of a lot of crap or a lot of chop or a lot of ranging that I just don't see on my smaller charts. Okay? So it's not a complete rule requirement, but I highly, highly recommend that you look at the 30-tick chart. It is a rule requirement that you be at a higher high or a lower low on your chart. But if you want to add to it, get the best of the best, take a peek at a bigger chart as well. Make sense? When you can confirm that on a shorter term and a smaller chart and a bigger chart to really see that, hey, the market is at those higher highs. It could be now time for some rejection, time for some exhaustion, time for a sling the other way. Okay? Yeah, and some of you are saying, hey, I see now where I've made my mistake. Yeah, you're just looking for any bar here or there that's got a wick on it, and it happens to be a third bar, right? Instead of qualifying it with everything else. So, for example, let's take a peek down here. You see the purple? There's the detector. Now, as always, just because a detector comes up, does that mean it's a valid trade and you should enter and place an order? No. All the detector knows to do is what it's programmed to do, to say it's bar number 3, it's got a TX on it, and either a Paul or a mini magnet. Give me an alert that it's there. It doesn't know if it's a valid trade. It doesn't know if the market's at a higher high or at a lower low or any of that. Okay? So technically this is a third bar with a sling, with an exhaustion box, with a trapped order. This one happens to have a Paul and a mini magnet. Do we take this short trade? I mean, you don't have, okay, yeah, there's obstructions in the way, there's a flux level, there's a this. Let's just say there was nothing in the way, there was no obstructions in the way. Do we take this short trade? Right, because it's short, but we're not taking a short because we only look for shorts at what? Higher highs, right? Okay. Now, so, with here, the market comes down, pulls up, comes down, pulls up, comes down. And I'm not saying this is a perfect trade because I don't like this chop right here, trading into the chop. Plus, we've got a big old stack here. But did this market make a lower low from what you can visibly see on this chart? Yes. And then look, you had another one here, right? With this purple detector showing you to go up. Okay. No, I don't like that trade really because it's trading into this chop and you got a lot of stuff here. But do you see the difference here? Now this market has come down and made a lower low. I only would be looking for long trades as far as third bar slings. Does that make sense? I'm not even worried about looking for short trades on a third bar sling. I'd only, as the market's pushing down, be looking for long trades. So back to something I covered a couple weeks ago about your focus and about asking yourself those questions over and over again, right? Is the market trending? Yes or no? Is the market diverging? Yes or no? Is the market ranging? Yes or no? So if you asked yourself a question, okay, yeah, the market's going short. What trades can I look for? Is a short third bar sling trade one of the trades on the list you're looking for as this market's coming down? No. You'd only be looking for potential long trades on third bar slings, right? So on your list of, okay, what should I look for right now? That kind of helps simplify that one, right? How about those of you that have purchased the semi-automated trading software that have said, oh man, that's a little confused, all those things on top, which ones do I have on or off? Well, if you see this market structure, is a short third bar sling one of the ones you have on or off? Oh, right. Pretty simple, right? Once you start to learn to, okay, what is the market doing? Which trades would be valid or not valid if they came up right now? Let me have those turned on. Okay, so just that right there, that helps simplify even for those of you using the trading assistant, Markers Plus, of, oh, this would be one of those times where I just turn that one off. I only have the long on. Oh, okay. That's not so complicated once you understand the question to ask and what to look for. So what's the why behind it? We're either wanting a higher high or a lower low. We're wanting to see that market structure, and then that sling comes up to break that structure and give it slingshot momentum the other way, right? And we're combining that with not just any sling, but that rejection on that third bar with the sling, which is where we know that the highest probability comes in. Then we're combining all of that with the top or bottom of that bar having exhaustion and trapped orders in it, which gives us even a higher probability and more confidence. Then we're adding to it that it's also got to have a mini magnet or a Paul at that extreme price level. Okay, and we're just adding all of that together. All right, to stack the odds and higher probability. And then we're looking at our order prints charts and our sniper chart to make sure there's nothing in the way, right? Because it doesn't matter how far back I pull on a slingshot if I'm firing it directly into a brick wall. That momentum means nothing, right? The pullback of force means nothing. The length of that wick means nothing if it's going to go right into a brick wall. So do you see where having this vision and having this understanding and combining all of these things really sets up a much higher probability trade? And do you now understand why? Not just, oh, that's the rule I got to follow, but why? Like, what's behind it? What gives me any confidence in this trade? Where do these ridiculous apex rules come from? Okay, because I feel like once you understand the rules, why and what's behind them, what you're actually doing here as far as spotting that rejection of the market structure with that weakness, the potential sling of momentum the other way, you can get in on it. Okay, so what are we identifying? We're looking for a trapped X box with a mini magnet or a pawl off a recent high or low that also has a TX on the third bar. It's a continuation bar, right? This particular trade is not on a reversal bar. It's a continuation bar of the opposing direction. The wick has to have at least 2 ticks of a wick. Okay. DR is not required. The detector color is purple. And again, we're only looking for shorts after a higher high. We're only looking for longs after a lower low. And as always, okay, do not enter if there's coil chop right before the trade. So if you go back 3 bars and that was coil chop, do not enter. Okay? We're not looking for that. We're looking for the structure I showed you of a clear kind of trend, higher high or lower low, and then that rejection. We're not looking for it bursting right out of coil chop. And as always, don't trade into the 5 major levels. You should already know all these: the deviation, the wall, the stack, the flux, dynamic magnet. Same situation there. Okay? So we already talked about this trade here, right? Pushing down low, makes a lower low, right? Then that third bar, we have our detector showing. We've got the sling pullback with momentum to shoot up. Got the exhaustion box, the trapped orders. This one has a pawl. Okay? So, yeah, David, they're similar in what they're doing. They're just a pullback. Okay? They're a pullback. Either going with the trend or against the trend. It's going one way and then kind of shooting the other way. Or like you see them in a trend, like here, being a pullback with a sling of momentum to keep going the direction it closes in. Okay? So again, at a lower low, we can take the long. All right? At a higher high, we can take the short. Okay? Understood? So somebody says, hey, why don't we look for them in a trend? Well, because they're not always as strong of a pullback in a trend. Remember how we looked in the beginning of, this has a multiple bar pullback or multiple bar retrace, and then it keeps going. Or this has a 1 bar elevator pullback, and then it keeps going. In this case of this thing, it's just a wick pullback. So we're actually, in a sense, taking them in a trend, but we're taking them in the rejection of the current trend to get in on the possible new direction of this trend. Does that make sense? Because we're seeing the one direction get, the one market structure get rejected and getting in early on the possible new direction, as opposed to getting in way late in a trend, going with it. That could be an area that it's already going to get rejected or exhausted at. Okay? Same rules apply as far as your entry and exits, just like all the other trades. Same stops and profits apply just like all the other trades. Okay? And as always, take cover if you're in a trade and you don't quite have enough room to get your full profit before there's a big stack of level, get out right below it or right above it. Okay? These are primarily scalp trades. Later on, you can learn to combine them with simplicity trades. Okay? Sometimes I will look at those combinations, especially in that situation we talked about earlier where Marion brought up, hey, there was double divergence in that trend. That trend could really be over. Now it's starting to go the other way. We've got a good third bar sling telling us there's a nice push going the other way. That could line up with a simplicity setup to get in for a longer trailing trade. Okay? So, once again, If you have not watched the elevator training section that we did last week, make sure to hop on over to the recordings to do that as well, to help give you a little deeper understanding about some of this market structure. Okay. Doesn't matter if the other bars have wicks or not. Okay, we can still take them. Meaning, does the second bar have to have a wick? Does not have to. Okay. So, was that helpful at all, guys? Did that clear up or simplify at all the TBS or the third bar sling setup and why it was there and what it was all about? Okay. Somebody asked about DR. DR does not, we are not looking for DR. DR does not need to match to take this trade because it pretty much never will. This trade will almost always be against DR. Okay. Good. All right. Glad that helped. Glad that simplified. Okay. Well, guys, I don't want to keep you much longer. It's a Saturday. I know it's still a holiday weekend here. I'm sure your family's looking for you to go do some stuff. So I will let you run and spend some time with them.